This is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show that we have every weekend, where we look at the technical charts and then try to understand what happened in the market in the previous week and then plan for a better trade for the upcoming week that's starting from tomorrow, August 19th, Monday 2024. So a lot of stuff is lined up, and let's get into the charts to begin with. This is the Nifty charts that you're seeing, weekly on the left side and right side daily. So we see that there's an ascending wedge and the market has hit the top and then slightly corrected, and then now once again it was a very short correction and it's bouncing back. On the daily charts on the right side for the Nifty, we see a decent breakout on last Friday after some consolidation that happened the previous other days before the Friday. Here you have the Banknifty, which is also having a very narrowing ascending wedge, and prices hit the top and then corrected, and then once again it seems to be trying to sustain that bounce above that exponential moving average that you see there. On the daily of the Banknifty, you see that it's within a parallel channel and it has hit the top and has done a decent correction of nearly 7%, and then it also did a good show on Friday, but a lot of resistance still need to be taken out by the Banknifty, if it has to catch up with Nifty. So that's the scenario. That's really what happened. So in order to summarize, we see that basically it's a V-shaped recovery week. That's what we can understand. V-shaped recovery will mean that we had initial days of fall and then it bounced up from there. Exactly what happened last week, and it was a positive close of less than 1%, but 0.70 points on Nifty. Nearly 171 points up is what we see from week-to-week basis from Nifty, and it was a 2 days of downfall and followed by a midweek holiday on Independence Day and then a Friday beautiful bounce back. Right, a solid bullish candle closing above the 20 exponential moving average, but what you need to worry is about the 2 window gap resistance that's up there on the Nifty. Banknifty overall has completed a 7% correction, less than the previous correction of 11% or something. So last week it did that 7% correction and quickly bounced back with a V-shaped recovery. Let us see whether it will sustain and then take out the 20 exponential moving average and the window gap resistance that's there for the Banknifty as well. So overall, net it's just a 35 points positive close. Both nice of close. It's a flattish positive indecisiveness that you see there on the Nifty, but on the Banknifty, but on the Nifty you see a very good recovery, and it has gone much more further by breaking out and closing above the 20 exponential moving average. So what you see in the candlesticks and patterns, let's try to see. So this is the weekly charts that you're seeing on the left side. It's a Nifty, right side of the Banknifty, the weekly candles. It's a solid green, making a high above the previous candle, previous week's candle. So it's more solid bullish. It seems to be doing the change in polarity bounce up from Nifty clearly. But in the case of Banknifty, although it has done a beautiful bounce, it is close below the previous candle's close. So it has repeated the pattern and it's at the neckline of the change in polarity zone, and it's not ready to close below that as well. So it's very crucial for the Banknifty to bounce up from here, just like how Nifty seems to have done. Otherwise, right, it may not sustain. So keep a close watch on a week-to-week basis if the Banknifty is supporting the Nifty to go back to the all-time high once again. That's 25-50, yeah, by that range. While the daily charts on the Nifty and the Banknifty is showing all other days, we have on the Friday we had a fall, same in Banknifty also, but Friday you have a beautiful pick up moves. That's what the Friday candles are bullish on both Nifty on the left side and the Banknifty on the right side. So that Friday did the recovery. That's following to some events in the US markets also, so we'll see that later. So Friday, Nifty seems to be recovering and then bouncing back to Banknifty, little tepid. I'll keep a close watch if that's what happens there. But on daily candles level, we see that V-shape recovery, V-shape on both fall down and the bounce. Both bands, we have a bullish biased consolidation sideways move that's seen on the left on the daily Nifty charts, and Banknifty, it's a bearish bias but still a consolidation. You can see that expansion on the downside has stopped and it's changing into consolidation. So market sideways is what short-term charts with the bullish bands are indicating. Now looking at the momentum using the RSI and the trend using ADX on multiple time frames of weekly and daily. Weekly on the left side with both indices, on the right side daily, we see that the momentum is intact, bullish and rising up as well in the Nifty, but Nifty, the momentum of the medium term weekly charts have not sustained. Not the momentum is not quite enough for it to make a comeback above the RSI 60 bullish zones. It's not happened. So Nifty's momentum is not good enough. Nifty has excellent momentum uptick with the last week's mounts. But on the right side, if you see the daily or the short-term candles, you see that it's beautiful recovery for Nifty and the Banknifty both. Especially the Banknifty on the Friday moves has taken the momentum from below the RSI 40 to above RSI 40. That means the bearish to sideways move has happened. So good momentum on this Friday's move or the daily candles is Expectancy, but still both indices in the short term has not come back to the bullish momentum yet. Keep in mind. So overall momentum is sideways, you can see. Similarly, the trend is still bearish. It's bearish and falling on the case of short-term Nifty, and medium-term Nifty also it's bearish and falling. So overall it's bearish, and that bearishness is falling with the trend swing of that bearishness is not that great, but it's still bearish. That's what on the Nifty. Nifty also it's bearish and falling, and bearishness is increasing in the case of medium term. So overall, momentum is climbing back to the sideways, and trend has remained in the bearish even after the Friday's big good move. Right? That's what it is. We'll summarize the prospective momentum and the trend. Now moving on to see what the volatility indicator or the ADX, the fair and grade indicator, is showing that it has taken another dip of 6.3% after spiking following previous big Bank of Japan events and all that. Now it has cooled off slight bit, 6% of fall, and it's still not cooled off that much. It's still 14.4, means it's in the medium range volatility, not at the low volatility range. So if it is still there, some kind of fear because of the Middle East crisis and because the recession fears or the rate cut anticipation and all these things, that the amount of the fear is not really cooled off. Moving here, if you try to understand the open interest analysis, we see that the futures open interest is showing its short covering built up on both indices, which is bullish, right? People covering the shorts and then going long. So it's kind of bullish and it can make big moves. So it's open interest, and open interest for the options is for the weekly expiry is showing that it's bullish, right? PCR is 1.19 and for the Nifty and number 1 in the case of Banknifty. So the options and basically the derivatives are clear for some reason very bullish. Now in this slide we're trying to understand what are the support resistance levels. First what levels we have put in is the levels from the technical charts based on the various support resistances methods that we have been discussing every week, or what we'll see in this week as well. But bottom what you see is the open interest based open support resistance levels. Let's try to understand that first. So the highest open interest in the options for the next weekly expiry of August 2021 Banknifty. So that's showing that the Nifty is having a range of 24,500 with the highest support is there, right? And then you have 24,400 for the second highest put writing is seen. That means second level of support. While when it comes to the resistance, it's 25,000 is where the highest put call writing is there, and that 49,900 very close by is also the second level of highest call writing. So that's just upper resistance levels for the Nifty and Banknifty. If you move 50,000 and 52,000 is where the highest put and call levels are there, and after that the second level is 49,000 and 5,500. So more or less the resistance support levels based on the technical charts it's listed on top may be matching to some extent on the OI based level. So you have to keep a balance of that and then try to derive your levels or replace your bet for the next week. So if you look at the charts here, the first level of resistance will be the gap that you see there. It's coming very close to the 24,600, 700 that level. So the gap has to be cleared first, and then 24,950 again has got a gap. So these two gaps is what's the main challenge that's going for the bank next week. And after that, you have an all-time level and a rounding number of 25k. Downside, this first support will come in at 24,000 nearby, where the 50 exponential moving average is there, and then you have the 23, the previous what was that level? 23,670, where we have the previous resistance zone from where the breakout happened. So that will be there, and if that is also breached, then you have the 23,400 where we have the 100 exponential moving average, and then 20,000 big rounding number support is also coming down there, right? 200 exponential moving average is very close to 23,284. It's way another 1,000 points down. I don't think it's going to that level in this bullish scenario. Banknifty, here you can see that the post resistance obviously would come in the 20 and 50 exponential moving average confluence, which is coming at 50,800 levels. So there will be a lot of resistance to break out and close above that on a daily basis. And 51,000 has got 51,087 to be precise. Has got a gap resistance. It's the first hindrance for the Banknifty after the 20 exponential moving average and 50 exponential moving average is conquered back. Once if that is cleared, it can find resistances near the big rounding numbers of 52,000, and then it would find a resistance before it takes out the previous 50,500, some below that, near that. Well, it may be taking out the lower low, lower high pattern. So once that plays where it's negating that price action, it may face some resistance. Similarly, the 23.6 resistance that's there just about 1,000 also makes resistance, because that that's a Fibonacci extension levels that's put in there. So resistance can come in places also. Make out these levels and then come out with the places where you bet, or the places where you will see more probability of support and resistance in the market price action. So next week, right? Here, let's try to see what the different industry sectors are performing. So we see that a big breakout move of 4.7% has happened in the IT sector because the US market also did well, and some wide range bullish candle that's seen there. It was absolutely bullish, rising on medium term and the short term. Therefore, we could place your bets on that. Right? Which other sector we can we just can't place a bet right now? It's a pharma sector again. It had a very less than 0.5%, it's nearly 0.5% down moves happened in the pharma, but it had a beautiful up move the previous weeks, and just momentum is intact there despite 0.5% fall last week. So momentum in the medium term and the short term is still bullish, right? Although it's slightly falling in the medium term, we can place your bets on the long side. FMCG is also another sector where the end was very flattish this week, but previous week to several weeks of momentum is good enough in the bullish zone, so we can place your bets. So that's the three defensive sectors: the IT, the pharma, and the FMCG. And these are all these sectors that and that has a quite a bullish moment. Others, the metal, auto, and reality has a lot of things to catch up with respect to the moment before we can place your bets on that. So last week we had a flattish close on the metal downside. Auto had up move, but still is not good enough to take out the short-term resistance above the RSI 60 to the bull zones. And the reality also had an up move with a bounce to 0.5% up move in the hammer weekly candle is out there, but the momentum is still sideways, and on the both time frames it's still sideways. A lot of time before it can take out and climb back into the bull zone. So it's the defensive sector once again. I'm repeating, the IT, the pharma, and the FMCG, the other sector which is continuing to be strong and bullish, where you can place your bets. So it's equal to equal. So three sectors, it's different sectors that's defending them and keeping the market. So how long will they do that is the question. All right. You see the charts are the same that we discussed, different sectors. Sectoral indices can be seen there. We see that a slight dip in the medium term on the metal, right? And apart from the dip in the metal in the sideways and slight dip in the reality. So metal and reality is having some trouble, but those are all in the bull zones. And ideally you can see it's taken a range shift. It's extremely bullish because it has taken us climb from sideways, and settled itself with an RSI about 60 and then bounced from there. That's beautiful bullishness. So ideally it's going to be breaking out once again is what it looks like, right? I'm going to see that the momentum of the metal will climb back a lot. And the momentum has fallen. It's consolidation from the top of the trend line chart in the case of auto and pharma. Breaking out like there is no end. But small dip has happened this week, I think. FMCG also heated up at the top. Very cautious. It is extremely bullish even now. Reality is consolidating and then trying to hold on its momentum over the RSI 60. Close watch if that's happening or not for the next weeks. Heavyweight stocks contribute maximum to the indices. We see it's the HDFC Bank is showing some red once again. It had regained the momentum, had climbed back to the RSI about 60, but it's finding it difficult, and once again it's slipping the sideways. We look at the RSI. So it's huge risk that's going to be there, and it's consolidated with a very, very long time, and then we're going to see if it should be able to take out that 1,800 levels where it just touched on a new high and then got sold into. Try to keep a close watch. It will break whatever happens or not. Probably it may remain this range for another few years, you never know. But that's the point. It has to have a green close above this resistance zone, consolidation zone, and then it has to show that that breakout is happening from the consolidation. But how long does consolidation continue? We never know that. And coming to Reliance charts, you can see that there is a small bounce up. The momentum is still sideways and falling. So it's small corrections happened, and it's not ready to go down, neither is it ready to go up. And slipping in the sideways is what you see there. And HDFC Bank also slipping in the sideways, and ICICI Bank is only bank which seems to be trying to sustain and remain the RSI 60, and there may be a bullish posterior reverse divergence also bullish enough, and there is every chance that the ICICI Bank then can once again move to the top of the channel and probably make new highs. There's across all of the bull zones on the very top charts that's seen with respect to the trend indicator. So ICICI Bank is doing good. HDFC and Reliance is not that doing good with respect to the heavyweight stocks that contribute maximum to the index. And here is the IT sector that's breaking out with bullish momentum on both TCS and Infosys, both of them, extremely bullish, and they're breaking out, just like how the indices of the IT sector had shown. Kotak Bank, as usual, is consolidation, and sideways momentum. And there is another one that's holding the market, the ITC. Once again, it continues to be in the bull zones, and then it's at this rounding pattern breakout zone and it's green close. So ITC and ICICI Bank are the two stocks, along with the two IT stocks, is what's holding the market. So what's not performing is obviously HDFC and the Reliance, right? But that's not required, it looks like, because we have strong IT, extremely strong IT, and then ITC also joins parity along with the ICICI Bank. That's more than enough. That's what the market is saying now. Looking at the broader market, the middle cap and small caps, once again, it's not ready to fall down or correct further, and it's having a clean close, not very far from the all-time highs, and with bullish momentum. And all-time high is very, very close. So extremely bullish broader markets, what we're seeing, despite the fact the market is heated up. Now, how did the institution perform last week? The Fyers continued to be sellers of 8,600 crores. They had been selling like hell for the last several weeks, and then they has continued to buy. It's mutual fund money that's holding the market since several years now, right? That's all that is required. Even if the Fyers are reducing the selling, that's enough for the market to move up because we are buying heavily. So that institutional worry, institutional money only that's falling in the market is kind of a worry because foreign money also has to flow in, right? Only then there is a healthy move. Otherwise, markets continue to move up and up, up and up without major corrections, and then something big event or fundamental something comes up and the market crash like 10 15 at one shot, or investors lose their money big time. Hope that doesn't happen. So the net longs of the derivatives, if you see the data also is kind of flattish and truncated week last week, right? Let's more and try to understand how the gold, the currencies, and the US markets are doing. So these are very crucial things that may have its impact. There's several stocks in the dice as well. Let's take the example of dollar currency. Currency is period has fallen down. The US dollar index is showing it's 0.70% down, and then it's at 102.4. So US market falling, US dollar index is falling down is good for us, but how far it will do that is what you'll look at and understand this week. It has been consolidation since a very long time. All it was suddenly slipped down the dear zones, right? So it may find its support somewhere nearby and then once again start moving up. So basically it's sideways consolidation that's happening in the medium term in the dollar index. But it is a red dollar week for last. I know moving at downside, the charts have used INR is also showing something that is not happening for the last several years since, or at least last one or couple of years. It had been forming this ascending wedge, but it's doing nothing. But index means the USD was being managed by the Reserve Bank. Now seems like it's breaking out of its own and then heading towards the 84 kind of level. So that way, if you look, the rupee is becoming weaker and weaker. Last week, that's exactly what happened. Market at USD is very very high levels where the rupee is depreciating. And cause worry, but hope it gets controlled and managed by the Reserve Bank. Now, moving ahead, let's try to understand how the crude oil is performing. We have a red inverter hammer, and inverter hammers could be an indication of the reversal of the upside or downside, depending on which high or low what is getting breached for the next week. So it will hit the top of the trendline channel, the parallel channel, and once again it has done that, and then that zone where it doesn't want to go up and then it's cooling off. It's not that great for gold marketing companies, but good for a quite important country like ours. Gold once again breaking out and making all-time highs. This is worry. So gold is breaking out and making new highs. It means money is getting shifted from the equity market is something that needs to be worried. So gold at all-time highs and a bullish momentum trend, absolutely. It's a hedging instrument. It may benefit in one way, but it may give some cause for worry about the equity markets or equity investments or trading as well. So keep that in mind. So let's move on and see how the US markets will perform. So that's where the action happened. Solid wide range bullish candle in the case of Dow Jones, S&P 500, and Nasdaq. All three of them have done beautiful reversal comeback, right? After a small correction that impacted even the Indian markets as well during the yen carry trade of Bank of Japan's issue last week. So beautiful recording following that, and look at the candle. Solid two bullish candles means it's confirmed recovery, and once again it's getting towards the all-time high. So US markets are doing extremely good. That's something that taken essence out of this discussion on the commodities and currencies and the US market. So US market is doing good. Currency is creating some problems. Gold is under control. Right? Gold is spiking. Worry. Right. Let's try to understand the stock picks now that we have done with all the analysis. Topics for the next week. ITC is having an only banner breakout potential. Advertised stop loss, and then we can play either a sync trade or a personal trade as well on this. Advertised stop loss was short increase your stop loss little more, or 2 candles more if it is portion play, right? Right is the moment is bullish, trend is bullish, volumes are super, pattern is also there, price, right? So that's a swing trade, means couple of weeks, right? That is actually can be both, like I said before. The Technicalanalysis is also having a rolling pattern breakout possibility, have a low stop loss is the candle is low, last candle is low, and then place your bets on the upside for 1:2 risk reward, right? And IT is doing extremely well, so Techam also big too. Tech Mahindra, IT stock, and ITC, the FMCG giant, right? Two stock picks for the next week. We'll have a strategy in the FNO as well, and this is a bull, it's a bear call, and bear slightly, but I don't want to lose anything if it is bearish. That's why, and I'm betting on with the hedge that's taken for the next week. That way, it's a bear call calendar spread. Right? Basically, I'm selling a call which is few points above this week's ATM strike, and I'm buying OTM call strikes, but for next week with hedge. So in effect, the squad is not that great, but you have to get out in 1 days before the expiry, and then probably is good. We're getting a beautiful range of 24,800, which is not very likely to be breached for the next week. We don't know if the market is breaking out, then take a loss and get out of the. We'll have another chance and another opportunity for the next week. Have happy losses and then come out of it. Instead of fighting with the market when it's breaking out like hell, right? That's what it is. But it's completely risk reward. You know what you will lose, and you're still in the game next week, right? The portion size as per the risk appetite and capital, right? This is for one lot that the payoff type chart is shown. You can have any number of lots as per the risk appetite, as per the capital size, right? Okay, that's for the next week. A fully hedged bear call calendar spread, FNO strategy, and the Nifty weekly options for the next week. Okay, let's just wrap it up. So we have a V-shaped recovery week, but overall momentum is sideways, and the trend is also not great. It is still in the bear zones, and we have a lower high patterns and corrections. So far, highest is in the range of 10 to 11% on the Banknifty and Nifty both, right? From a 1-year lows, if you take count, it's a value of 49% Nifty and nearly 38% Banknifty. That's kind of breakout move. That's kind of levels, heated up levels that we are in the market. So yes, the full recovery week bounce up is what you see, but Banknifty is not done that beautiful bounce up. And now overall, if you see, Banknifty has to join the party, otherwise they're in trouble. We'll try to put together things in the buckets of bulls and the bears. So changing polarity bounce up is in progress, seems to be working, at least in the case of Nifty, but we had been anticipating the previous week. And the mid-cap index is still having green close and then not ready to move down and breaking out and the all-time highs once again is also in favor of the bulls. So bottom market index is doing good. When it comes to open interest, the futures are high, but level short covering, which is bullish again. PCR is all the options are high, so that's also bullish with above 1 on both indices. US markets have done extremely good bounce up last week, solid green close. And what do you have here? You have a green close above the 20 exponential moving average for the Nifty. So it's a solid Friday candlestick. So the factors you can put in the favor of the bulls. And what's in favor of the bears is the lower high pattern, price action pattern that we've been talking about last week as well. Continues to be there in the case of Banknifty especially. And sideways momentum and bearish trend is what you see overall in the medium term, right? So Nifty is less than the 20 exponential moving average. There's no closed above like Nifty has done. Heavy stocks are falling the kind of sideways. It's the pharma, FMCG and IT that is doing good. But other sectors like reality, metals and all this has to catch up, but Yeah, we don't have all the sectors bullish. That's one thing, nutshell. And then we have a gap resistance on the upside, which we already talked about that earlier. So that's also going in the bucket of the bears. And then we have the bulge band, which is having a bearish bias expansion. Not expansion, bearish bias consolidation. Sorry, that actually is expansion. It's not expansion. It's contraction because it's sideways. But it's sideways with a bearish bias in the case of Banknifty. In the case of Nifty, it is a bearish bias. It's a bullish bias consolidation. So overall, sideways consolidation that's happening on the bottom of the batch trading. We've already seen that, right? Then we have an ascending wedge. We've already seen that for the very first chart. No? And we have Fyers. Let's sell this continuing for several weeks. So these are the factors in the base and the moves. So you need to be, one thing is you need to be extremely cautious in the market. It's at the very top, heated up, extremely at the very top level with hardly any corrections. Very, very less than 5%, 7% kind of corrections. That's not even a correction. But you gotta be have tight stop losses, and then when a good correction comes in, have tight stop losses and play if you want to play. As IB flows for the investing, would continue as before, whether the market goes down or up. It's about investing. We're talking about trading. We have to have tight stop losses and then refrain from taking long positions in the market is at the very top, heated up. Right? Technically, it's heated up. We can know that, and it's doing short corrections, and then once again it's climbing back to sideways. We make another new high, and then make another small correction. That's what's happening. So my view remains to be mildly bearish because it's not confirmed the bullishness yet, at least with respect to the momentum. Despite the fact that we had a beautiful bounce back. The global cues around the trade, there is an interest rate anticipation, there's a war and warfare and all these things. So whenever this black swan events happens, all the technical analysis goes for it, also I used to say every week. So we had the hidden book issue on the SEBI chair that came in and then it fizzled out and nothing happened. Market ignored it. So you never know how the market reacts to certain events. So we can only anticipate and have tight stop losses and see areas of support and resistances. That's all it's in our hands. So stick to your stop loss rules and always hedge your positions. So when you fall may be an opportunity, but do the falls not in big lump sums but in chunks, right? Average down. So 23,500 and 25,000 is where the levels that I look on the downside and upside and the Nifty, and 48,500 and 50,000 is upside and downside and upside in the case of Banknifty. So as long as 24,000 and 50,000 is maintained, things are good and the rally will continue. Otherwise, we may have some corrections. So always hedge your positions because I think it is very crucial. Have spreads taken instead of having naked calls and then no hedges. So don't do that. Market can fail you heavily on the downside. It will fall very sharp and then you are no longer in the game. Have tight stop loss and then know your loss and then take your loss and then continue to play the bet, right? So it's very important to have just know this same hedging that you're using can be used for getting regular incomes when the market is falling down also. So check out the playlist for the different strategies and the options which can be applied. That's all I have for the next week. If you like it. If you like to put in comments, feedback, share that. Well, if you like it, please subscribe it and share it to friends. Yeah, I'm also active on all these different channels, especially the Twitter where I place analysis on day-to-day basis, unlike this weekly basis analysis on YouTube. So subscribe to those channels as well. Thanks for watching. Happy trading, happy learning, happy investing. Goodbye.